Hello traders, Gary Wagner here. Approximately 12:10 in Honolulu, 5:10 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 14th day of January, 2022, and this is the Daily Report for Gold and Silver, our weekend review. Gold did have a modest decline today, as well as yesterday, but as you will see when we look at some weekly charts, it has closed higher for the last 4 out of the 5 consecutive weeks. Currently, we have gold trading at $1,817.30, which is a net decline of $4.10. We are currently involved in a trade that we will discuss in detail when we look at some technical studies. We will also convey why we still believe that bullish market sentiment prevails and will continue to prevail even with a more hawkish Fed as we move through 2022. There was actually some buying in gold that more than overtook the selling pressure. However, it was dollar strength that resulted in today's modest decline of $4.10. And that is the fact that the dollar gained 30 points or 0.32% when compared to the decline in gold, which was minus 0.23%. You can see that the dollar more than compensated for the slight bullish market sentiment that would have taken gold higher, all things being equal, meaning that we didn't account for changes in the relative value of the dollar. However, the same cannot be said for silver, that experienced a decline of about 0.75% or 17 cents, taking silver back below $23. Currently, the March contract is fixed at $22.99. This first chart that we are looking at is a weekly chart of gold futures. It's a continuous contract. And as I said during my opening statement, we can see that over the last 5 trading weeks, 4 of those 5 trading weeks resulted in gold having higher value when we compare Monday's open to Friday's close. It was only last week in which Friday closed below Monday's opening price, and that one is right here. The net result has been a decline in gold for the first part of the year. I believe it's 0.6%. However, when we compare it to the lows achieved during the second week of December, we have seen a modest increase in price from 1784, I'm looking at the open here, to current pricing at 1817. And as you will see when we look at our daily charts, I have real solid technical data to reflect my assumption, which is that gold continues to trade with the undertones of bullish market sentiment. And traders, we are looking at a daily candlestick chart. And as I said, I want to illustrate why I believe we clearly have bullish market sentiment. First of all, I am pegging major support at the 78% retracement level. That occurs at $1,784.90. I have resistance beginning at $1,833.50, again at $1,851, and then our highs that came in above that at approximately $1,880. But I believe there's something more important than that, and that is a band of support that is comprised with 3 distinctly different moving averages. And the averages that I am referring to are the 50-day, 100-day, and 200-day moving averages, because currently we are moving back into full bullish alignment. The lower line at 1794.70, this represents the 100-day. The 200-day is now caught in the middle. In other words, it has crossed above the 100-day, but the 200-day is still below the 50-day, because to be in full bullish alignment, we need to see one more thing happen, and that is for this 100 to move above the 200. Lastly is our shortest term 50-day moving average, and that is sitting at 1808.40. So between 1795 to round it up and 1808 to round it down, this is the critical band that is needed on a technical basis for gold prices to trade above, for us to say with an extreme level of confidence that gold continues to trade in a bullish mode with positive market sentiment. As you know, we are currently long February gold. We still have about a week to a week and a half until we need to roll that over into the next forward month. In gold, it is every 2 months. So from February, you go to the April contract. But right now, we are long at 1787.60 with a stop at 1798.60, which is occurring just above the 100-day moving average. We will look to possibly trail our stops up at the beginning of next week. And by next week, I'm talking about Tuesday, because we will be closed for the observance of Martin Luther King Day on Monday of this week. Most likely, we'll trail it up to between 1801 and 1808. Those are based upon the 250-day moving averages. This has been Gary Wagner, wishing you, as always, good trading. Have a great 3-day weekend. We'll talk to you on Tuesday for the next daily update and review. Bye-bye.